Zillow has officially withdrawn from the race to buy up homes in America as an iBuyer. If you don't know what an iBuyer is, don't worry, we'll get into that. But this basically leaves a clear number one winner right now in the category, which is Opendoor. So as a consequence of Zillow's withdrawal in this race, their stock price dropped about 20% in the day, especially after hours when they officially reported it with their Q3 earnings. The iBuyer pioneer Opendoor also dropped 17% during the session, and its competitor OfferPad also dropped nearly 3%. The reason for the competitors dropping are because people are questioning the model itself. But the model itself really isn't anything revolutionary. It's just disrupting an already existing industry, which is basically flipping homes. So this is something that's been profitable for a long time for many players, but they're basically computerizing it, making it digital, and making it automatic with the use of AI. So that's the part which is basically disruptive. So I don't think the competitors honestly should be impacted as much because Zillow clearly just didn't do a good job at it. So I've been looking at these stocks for a while right now after de-SPAC, including Opendoor and OfferPad, but I just haven't made a move. So given this drop, I wanted to take a deeper look to see whether this is a good time to get in for a long-term play. Hello everyone, my name is Bill Hawk. In this channel, we talk about mostly stocks, investing, crypto, real estate, business, technology, all that good stuff. If at any point in this video you receive some value, I ask that you please hit the like button and subscribe because it helps me out with the YouTube algorithm, and this channel is still new and I would like to say it's growing. Before we dive into the business model for iBuyers and Opendoor, let's take a look at the traditional real estate model and just basically revisit it. So let's say you want to sell your home. The first thing you're going to do obviously is find an agent, and then you're going to have to do some repairs and prep the home. You're going to list the home, let's just say in this case for 250 grand. You're going to have to host several open houses or showings to prospective buyers. Then you're going to receive an offer for 240. So they're obviously going to try to lowball you. You're going to negotiate some repairs. You're going to find a new home. Then in that case, the buyer's going to do their inspection. All this time, you're going to be waiting for close. You're going to be looking for a new home, and you may miss out on your new home, your dream home that you're looking to move into. It's a pretty complicated and lengthy process, basically, when we sum it all together. If you've been through it, you know what I'm talking about. And it's also expensive. There's a lot of broker commissions, there's closing costs, lawyers, mortgage closing costs, there's all kinds of things, and the average closing cost, as you can see here, adds up to about $30,000. Enter iBuyers like Opendoor or OfferPad. They basically act as a middleman instead of an agent. They buy the home directly off the seller, they do the renovations, they fix it, and then they flip it to another buyer for obviously a profit. So like I said, the model is pretty simple. It's just flipping houses, but they're doing it based on an AI platform, making the process a lot easier. As you can see here, the iBuyer model is just so simple if you want to sell your home to them. You basically fill out a 3-minute form and you get a cash offer within 24 hours, sometimes even sooner depending on the iBuyer. You then can search their marketplace for other homes that they have vacant. You can access through your mobile app. The entire inspection and closing process is virtual, so it literally does not get any easier than this. iBuyers are just so efficient because of the AI and algorithm that tells them exactly what a home is worth, what they need to put in terms of repairs, and the after repair value, what they can sell the home for. This is all automated because of AI and machine learning, and that's the real disruption here. Then they basically make their money on that spread, so that margin, also service fees they charge. They can also work with realtors for commissions if that needs to be done. Taking a look at a traditional sale versus an Opendoor sale, we're gonna see why the traditional sale is more complex with more parties involved, more uncertain. About 20% of deals fall through, which is a crazy high number. They're also very slow. The average days to close on a house is 87, which is also really high, and it's also just more human intensive. But for that convenience, with 0 days to market, closing date totally flexible on you, and 0% fall through, you're gonna pay in the form of a lower selling price. And Opendoor, typically, they're not gonna lowball you, but they're gonna need to make money, so they're gonna be paying you a little less than market. You can just assume that. Their fees are a little higher, so to close on a traditional sale, you're paying about 5.5% to the buying and selling agent and whatnot, and with Opendoor, it's a flat 7%. The closing costs, other than that, are the same, and there's no hidden costs with Opendoor. It's pretty clear to see why this model exists and where it provides value. The answer to that is just convenience. It's never been easier to sell your home than it is with iBuyers, and that's why they're going to continue taking market share from the traditional $1.6 trillion real estate industry that's never been disrupted. So I don't think there's anything wrong with the model. The model has always existed of flipping homes. It just never involved AI, and I think that Zillow just did a poor job executing it, which is why they dropped out. There's nothing wrong with the real estate market yet, and there's nothing wrong with the model. So let's talk some numbers, let's talk valuation, and let's see what these companies are potentially worth. The first thing that I wanted to know, and probably you want to know, is how much are they making per home? So as you can see here, with Opendoor, last year they're making about 7 grand a home. This year, That's gone up to now $37,000 a home. And I don't think this number is going to sustain. It's just because the housing market has been red hot, and this is the consequence of it. I don't think this is going to be sustainable, but this is clear proof that this model works. Like, they're getting 37,000 contribution profit per home sold. Now we take a look at OfferPad. They're on the same trajectory. They were previously at about 6 grand a house, and now they're about 33.5 grand. So they're following the same path, which is consistent with the real estate market as a whole. Opendoor and OfferPad pretty much have identical business models, except Opendoor is just focusing a lot more on growth and being a lot more aggressive there, whereas OfferPad, along with growth, is not losing sight of profitability, naturally causing them to be a little bit more conservative. But in my opinion, that's just a more superior model, especially of how quickly things change in real estate and the fact that we're going to have interest rates going up, which is going to be a headwind for the industry as a whole. So I think that's a better model, but I know that stock returns don't always correlate to this. In fact, they usually never do. You can visually see what I'm talking about on this site here, iBuyer Stats, which is pretty cool. And you can see here, iBuyer homes for sale by day. Opendoor is just killing it. You can see Zillow was being very aggressive, trying to catch up, which obviously didn't work out very well for them. And here you can see OfferPad. There's also a bunch of other statistics here by state, listings overall, and then also margins by price. And you can see that OfferPad typically has higher margins. They're being a little bit more conservative, whereas again, Opendoor is okay with lower margins and just focused on having more dots on this plot. This is a great site. If you're interested in investing in any of these companies, I highly suggest you check this out because this is going to be a lot of useful data. Before we get started, I just want to let you know that whoever is not on my email list, you won't get access to this beautiful spreadsheet with all the numbers. But if you want access, then sign up. The link is in the description. But if all this hurts your head, I don't blame you. You can just watch me and we'll go through it together at a very high level. But of course, if you want to play with the assumptions and change your own model, that's highly recommended because you should be making your own decision and not just following me. Now that that's out of the way, let's get right into it. So I'm expecting, this is Opendoor by the way, to grow its revenues to about 13 billion in 2025 by selling approximately 32,500 homes. And this equals about an average selling home of about 400,000 or so. This number is pretty conservative because the current selling price right now for the average home is about 400,000. So I'm not factoring in a lot of appreciation between now and 2025 in the real estate market, which I would say is pretty conservative. I don't want to, just like in any real estate project, I don't like to bank on appreciation. If I'm flipping, this is the same case here. So if we assume the lower end of their long-term EBITDA margin of 4%, they'll be at about 520 million of EBITDA by 2025. I honestly think that EV over EBITDA or price over EBITDA, basically an EBITDA multiple, is more appropriate to value Opendoor and other iBuyers because they're just so capital intensive. So it's really hard to evaluate based on sales or even earnings in that matter because they're holding a lot of inventory and there's literally no benchmark. So this is a pretty difficult task, but we got to try to make something out of it, right? So here's what they're at right now in terms of EBITDA multiple. They're at nearly 200, which is obviously very expensive. So I'm factoring in a compression of their EBITDA multiple to about half and 100 EBITDA by 2025 where they're still growing. I'm obviously a little bit more conservative than their forecast. And these revenue forecasts, by the way, are strictly from their guidance, from their de-SPAC presentation, which they're blowing past right now. In terms of 2021, they've blown past their guidance. So I think this is probably conservative should the market remain the same. And should they reach their lower end of their EBITDA margin, we're going to see at 100 times EBITDA multiple, $86 price, which is 300% or 3 times where we are right now. So that's a considerable upside. But quite frankly, is this going to happen? I don't freaking know. I don't know if we're going to get 100 EBITDA multiple then. I just don't know. That's a big assumption. We can debate it. Let's talk about it in the comments. But I'm factoring in a compression of half of what it is where it is right now. The only other competitor here is OfferPad. Obviously, there's no point mentioning Zillow. But as you can see here in their numbers, which I also mentioned, they're growing and expected to grow at a much slower pace than Opendoor. But what are they valued at? All right, so for OfferPad, I kind of cheated. I didn't do the whole forecast of homes sold. I just didn't think it was important and I wanted to save some time. I did OfferPad right here. I forecasted their 2025 revenue to be about 7.5 billion. That's assuming they still have a significant growth rate and they catch up. OfferPad obviously is still lagging quite a bit, about half of where Opendoor would be in 2025. And their valuation right now, if you take a look at it, is actually half of what Opendoor is. So they're about a 55 times EBITDA multiple. And I'm expecting them, there's honestly not much room here to compress. If you're going to grow at 50% a year, you can't compress any lower than that. They're already valued insanely cheap. So, hint, hint, that's obviously somewhere that's attractive for me. And, 40x multiple on EBITDA at a company that's growing at, 40, 50% is very reasonable. So that's an upside of 600% or 6 times where we are right now, which obviously is a lot higher than 300% or 3x. So does that mean you should buy OfferPad instead of Opendoor? I'm going to get into that in my conclusion, but first let's just talk about some of the risks. So the number one risk, of course, is the housing market. The housing market has been red hot. It can't go on like this forever. It has to cool down. I'm not saying it has to blow up and crash. I'm not saying that, but there's a lot of headwinds. And the second risk, of course, which is tied to that, is interest rates. We're obviously bottomed out on interest rates. They're only going to go up from here, so that's going to be a headwind. It's going to slow down the industry. It's just natural. It happens. This is why real estate is cyclical. So it's not the best industry to be in right now, honestly, but of course this has some technology aspect to it and it has a disruption to it, so obviously there's that going for us. The third big risk here is competition, and competition is not as simple as just Opendoor versus OfferPad. Of course, Zillow's not in the game anymore, but Redfin is. But what competition is going to do is squeeze those margins. So naturally, if you're a flipper, if you're in real estate, you know what it's like, especially if you bought recently, you know what it's like to place competitive bids on houses, and naturally that margin for flipping homes is going to get down. So think like how Uber and Lyft and all those ride-sharing companies were basically trying to get market share at the cost of profits, and this is something that's going to potentially weigh on this industry, and I think it's going to be a little challenging. All right, so for my conclusion, as you just saw, OfferPad in terms of valuation is a clear winner. They're valued almost half of what OfferPad, I keep mixing them up, Opendoor, OfferPad. If I mix them up anywhere previously in this video, then please forgive me, just ignore it. I'm pretty sure you'll know what I mean. But as I was saying, OfferPad is valued half of what Opendoor is, but that doesn't necessarily mean that we have to buy OfferPad, because the growth story really is with Opendoor, and Opendoor is growing much faster, and sometimes the market just rewards that. Actually, as of late, the market has always been rewarding that recently, and that's the reason why I wouldn't necessarily go with OfferPad all in. I think that it's important to allocate to both of them as a hedge. In terms of allocation, I would allocate a slower amount. That's just me because of the headwinds of the real estate industry, and I like to have my real estate allocation in real assets. I want actual ownership of physical things that I can see, feel, and touch, because that just gives me some more comfort. I can use more leverage, and I like to get my real estate exposure that way. But given where OfferPad is right now, it's super cheap. I actually just dropped about 10 grand on it today. I've been watching this stock for a while, and it typically bottoms out at that $7.30 level, around there. It pops from there and it goes back down. I don't know what's happening, but I do think that it's going to have a long-term trajectory which will be upward. So if you can buy it at that price, I would go in. Opendoor, as we saw, it just dropped quite a bit. Earnings coming up is going to be interesting to see where, how their quarter was. I don't expect them to drop the ball and flop like Zillow did. I honestly don't see that happening, but we just never know. I think it's a pretty far possibility. But last quarter, they blew it out of the park, and they give good guidance for Q3. We have no indication of them doing this. So it's probably a fair gamble to take, which I'm also taking, but going in a little bit more careful. The valuation is a little higher, of course, but again, I think the growth potential is a lot higher. So that's pretty much it for the video. I hope you like it. Again, if you like it, please like it and subscribe to my newsletter. If you have any feedback, leave them in the comments. And yeah, let's see what happens here, and let's do this together.